All right, so if you guys have any questions, go ahead and type them. I'll make sure to cover those in the future. What's up, guys? If you're just joining me, I see there's a couple of people on YouTube, so that's awesome. If you guys have any questions, type them below wherever you're watching this. But the one thing I want to start with, and I was basically planning on talking about basically like a review of the past year, review of the past year for my trading. But there's one topic I really want to address first. One thing I feel like I have to talk about it, and it's all about indicators. Now we've had someone in the Facebook group recently saying that he's been looking for a lot of indicators and a lot of price actions, see how things work, like how he's supposed to trade with that. Things like basically pin bars, indicators, Bollinger Band, whatever. And the one thing that comes back, and this is that comes back all the time, is the guy saying, "Well, I've looked at some chart and it doesn't work." Right? The things I've been looking at, the things I've been trying to read in books and everything, they don't work in real life. Now, this is true to a certain extent. It's not true that all indicators are going to work all the time. It's not true that price action works all the time. You cannot just read something in a book and start to trade it because you have no idea how much it's going to work. Yeah, for sure, it's probably going to work. Like, it's going to work fine in any market. But if you want to know what stats it's going to work at, you need to test it yourself. And the one thing I said to that guy is that there's traders with strategies that work like 30% of the time. They win their trade 30% of the time. That's like normal, and that works. The only thing is you always need to adjust your reward to risk with your win rate. Right? If you don't have the good win rate, then don't expect that you can have a low reward to risk. But you need to combine both. So you could have a low reward to risk and a high win rate, or you could have a high reward to risk. Did I say that wrong? Yeah, I said that wrong. So you could have a low reward to risk and a high win rate, or a low win rate, and a high reward to risk. Okay, those are two different things. What's up, Jesse? Nice to see you here. Awesome. So we have a couple of people watching on Facebook. That's great. So if you guys have any question, again, type them below. I just wanted to cover this first thing for the strategy part of the Q&A, and the technical analysis part. Nothing works all the time, so you have to be comfortable with that. And you have to be willing to think about probabilities. Like, that's super, super important. Because people who focus on trying to make things work and trying to do everything like work correctly, they're just gonna be surprised when they see that like 50% or like whatever percent of the trade don't work. But that's totally normal, and you have to deal with it. That's part of life. It's part of trading. Nothing works all the time. So first thing I wanted to cover. Second thing that I want to cover today. Cool. Nice questions. That's awesome. So I'll cover that for sure, Jesse, in a couple of minutes. But the one thing I want to cover today is I got asked a couple of times the question of, so how did I perform this year? What did I do well? What did I do not well? And like, what is my return? And you guys know that I don't publish all my stats. I try to give as much as possible. But there's things that I cannot share based on the fact that I trade for other people. And I don't want to like put the privacy and share the profit I made and all that stuff for every trade. But the one thing I can say is that it's been a mess for me to compile all the results on all my account this year. Because I started the year with trading one account, my personal account. And then I've been adding a second account, which was for kind of... So I was starting off with one account. I was doing swing trading. Then I started to do day trading. So I took that account for day trading, opened a new account for swing trading, and then I had another account with another investor. So managing all those accounts really makes it tough. So I have like all different returns for all different accounts. And I don't want to just add them up because it's not the same thing. I don't want to like do an average because it's not really the same thing, because they all have different amounts of money, right? So that's one thing. And usually on one account that I have, I'm kind of duplicating the transaction I place or the trade I take for another account, the account I trade for someone else. So it's kind of a big mess. But basically, all the accounts are profitable this year. And the thing is that to start trading this account for the other person, I really started lower than usual. Like, I didn't go full all in, like with the usual risk. So I started with like a small risk of like 0.1% per trade, which is like really, really low, right? It's not big. And that allowed me to get like a 5% probably or so for that account. which is pretty acceptable given the fact that you're risking only 0.1%. And I didn't trade that for the whole year. I traded that for like past 3-4 months. So it's pretty good to start with. And then I have like my account, my swing trading account, which I talked about had a huge drawdown in the year, a huge well, like huge depending on what you think about. But I had like a 6 or 7% drawdown in the year, and I'm not super happy about how I was able to handle this drawdown. Like I think things would have been much better if I did things differently a little bit. But the month, I think it was July or June, I'm not sure. No, I think it was July. July I had a drawdown of 6.49%. All the other months before were all profitable from the beginning of the year. But that took like probably 2 months of profit. And then the next month, I think I lost like was pretty low, like 2%, like 1% or 2%. But I think if I would have handled this the right way, and if I would have even like reviewed even more, I think I would have been able to have a profitable month after. So it took like 2 months of the year where I had some losing month, which is like it's acceptable. It's the way it works sometimes, but I just wished I had like done things a little bit differently. But the cool thing with this is I know now how to handle a drawdown. Like that was the first time I was trading kind of full time more and handling like a drawdown like this. So it's much better now. And the one thing I want to talk about too is the fact that it's good for you to set trading goals, right? It's really important for you to set trading goals. But often people are gonna have goals like I want to have like this big return, or like I want to be able to trade full time, and that's all good. Like, but that's more like a vision. What I was really focused on this year was not necessarily having a big return, not necessarily having a lot of money from trading. The main thing I wanted to do this year, really for my trading, was to be able to get out there and have some investors to invest in my trading, to allow me to trade bigger. Because I knew I wouldn't be able to trade with just my own account for now. Like it's too hard to sustain for sure. So having these investors outside is really what I was focusing on for this past year. And my target for the year was to have, uh, I think I said, well, it's in the year. I said 100,000 in trading capital for the year, which is pretty good given the fact that you go from a small account of a couple of thousands to 100,000, which was the goal for the year. Now I didn't reach that goal. I want to tell you guys I didn't reach the full goal, but I'm pretty happy because I got like a good portion of that amount. So close to the target, but not quite. So but it's still pretty good. So and I know it's gonna get better over time. So this is what I want to share with the goals. Whenever you're gonna begin the year, and I'll do probably this next week for the Q&A, you want to be able to set goals on where you want to go, what do you want to focus on, and it's good to have a vision and a goal. Vision is probably going to be like how you want to be at the end of the year. Goal is going to be more, well, to get to that vision, I need to do this, and that. Right? Those are your goals, and it can depend on a lot of factors. It could be to increase your capital, could be to have certain return, could be just to implement one thing. Like that's something I did. And if you guys go like that's going to be really terrible. But if you guys go in the early episode of the podcast, I think this I'll just check it quickly, but I think this is episode maybe 3 or something of the podcast, and you'll see that I had a like brilliant idea to publish my trading goal at that time. Those goals were really basic, but the only goals I had were to basically, if I remember well, to implement some things, because I didn't want to focus on profit. I didn't want to focus on like having a percentage of return. The only goal I had was to implement a few things. So I talk about a few things there, trading out loud. What you have to know is that the podcast quality is really bad. Like it's not as today. I was doing everything myself, but yeah, it's still like I still talk about my goals. Yeah, I think I had 3 goals, but that's something you guys can try also. And yeah, so that's it. So that's pretty much what I wanted to share about the review of the year, things I did well. Well, things I did well, just to add to that, I think getting that capital was really a good point, right? Probably the biggest and the most important thing that I've done this year. Being consistent is always good. I'm not super happy about how I handled the drawdown, although it was not as big as it could have been. but I'm still happy that I was able to overcome this and to get back with a profitable year. So that's pretty much it for this year. And pretty happy also to be able to teach. That's also a good point. And we'll talk. I'll do an article about that too, because people ask me why I teach, why I want to teach people, why I want to do podcasts and everything. And there's one key reason, like one simple reason, and it's not money. Like that's not the biggest goal. But I'll share more about that in the next few episodes or next Q&A or something. So guys, we'll get to your question now. I see there's one question here by Jesse, which is going to be really, really cool. And if you guys on Facebook, I'll just check quickly. If you guys have any question, type them there, and we'll make sure to answer those questions. That's going to be an interesting question. Cool. I see Derek here with the question. Awesome. Cool. That's great. So Derek, we have Jesse, and I'll just go in the Facebook group quickly because I want to see. Okay, because sometimes I miss question and that kind of sucks, but yeah. I'm pretty happy about how many people joined the academy this week. That's gonna be pretty interesting. And yeah. Oh, cool. Question from Fatima. Cool. That's gonna be good also. Nice. So 3 nice questions I'll have to answer. That's awesome. Um, yeah, I was just saying there's a couple of people joined the academy last week. If you guys are not there yet in the academy, totally fine. But if you want to have a way really to get in touch with me more and be able to talk and have mastermind call with a group of really, really serious trader, well, that's going to be the place to go. But I'll put the link above or below if you guys want to see what it's about. But if not, like, just keep going and I'll answer your question anyway. So first question, that's an interesting one. Jesse, who's asking, how can I improve my strategies? I want to learn more. So whenever you think about a strategy, okay, pick any strategy you want. Strategy is like only a way to add up confluence to get to a profitable strategy, right? That's the only goal. So the more factor you add to your strategy, usually the more reliable it's going to be, or unreliable. Okay, that's going to vary. But if you want to improve a strategy, the only thing you have to do is to add more criteria to how you're going to place your trade. And I'll give you some example, right? The thing I always share, the process of how you trade. There's 4 parts. Market phase, which is the first part. How you look at the market. Is it trending? Is it sideways? Second part is price action. Or no, sorry. Second part is like zones. Support resistance zones. That's the second part. So what levels are interesting to trade? Third part is going to be price action. What candlestick are at this at these zones? What is the price doing at these zones? Okay, that's the third step. So we'll just recap: market phase, then support resistance zones, and then price action. So when you have this, you can create yourself a strategy. Okay, those are the 3 first parts. And then if you see that, well, you trade at the support resistance level in sideways market, that's fine. You look for the highs and the lows, because these are the resistance levels and the support level. And then you look at, let's say, pin bars at those levels. Okay, whatever. Now, what you want to do is you test this, see if it works. Can you have a good reward to risk? If you aim for 2 of reward to risk, and you so can you have a good win rate with that? If yes, well, that's pretty good, right? Trade it. That's fine. You have a strategy, so trade it. That's it. If not, then you go on the next level. The next level is going to be indicators. What indicator can you add? Or you could even add price action to this, like more price action rule, like trade with the trend or trade like whatever. And then you go to indicators. What indicators can help me confirm this? What indicators can I use to add more confluence to this? Could I use, for example, the Bollinger Band at the top of the range to confirm with a breakout of the Bollinger Band, and then I come back within the Bollinger Band? That's like a possibility. Or could I combine this if I'm trading sideways? Can I combine this with the RSI? Because the RSI might tell me if it's overbought or oversold. Don't forget, the RSI works in sideways market, not in trend. Could I combine this with the stochastic? Or could I use moving average if I trade trends to add more criteria to a strategy? Those are ways you make your strategy better. And of course, like there's reward to risk. That's part of your strategy, and what you're gonna risk, right? If you risk 10% per trade, well, of course, your strategy might work, but it might not work. It might not work a long time because eventually you'll probably lose a big portion of your account. So those are all things you have to think about. But I hope this helps. Let me know, Jesse, if it helps a little bit. But it's really about adding confluence. Yes, as I said, there's always four factors: market phase, which is pretty easy to figure out, support resistance areas, price action, and then indicators. Right? Those are the only things you can look at. So I hope this answered the question. Derek, that's gonna be interesting as well. I've been using the ATMA before I enter a trade. I watch for price to close past the ATMA. What do you think of this strategy? So I'm not sure exactly, Derek, what you're referring to here, but I'll just tell you what I think and what I think that is. I think you're basically waiting for kind of price to go above the EMA if you're gonna buy, and then you buy expecting price to go up. If it's that, well, past the ATMA. Yeah, or unless you're having the EMA and then you wait for price to pull back and then you buy when price break. But the one thing you need to figure out is that first of all, EMAs or any moving average are only going to be good when you want to trade trends. All right, and usually those trends are going to be not all the time. Like what you're going to figure out with this is that your win rate is going to be probably pretty low. It's probably going to be like near. I'm just guessing here. Like it's hard to say because I don't trend trades. I don't trade trends, but it's probably going to be near 30% or around that area, or maybe 40%, like at maximum, because trend don't happen all the time, and usually you need to figure out whether the market is trending or not. The ATMA, what I can tell you, like just by memory like this, is that the ATMA is going to be good when the trend is really strong. If the trend is not strong, well, it's going to be difficult. And if you wait for price to break an EMA and the trend's not strong, well, maybe it might not work. And if it's going sideways, you're going to be stopped out really, really often. Like, take any range of the chart, put the 8 EMA on the chart, and you'll see that you're going to be stopped out like super often because it's sideways. But when you pick a trend, and that's where the power of trend trading is, right? If you pick a trend, and like if you've been trading that for a long time, you lost like the past 7 trade, and then you pick like a strong trend, like price really getting in an uptrend, you need to be able to let that trade run. And that's something that is difficult for me sometimes, difficult for most people, but you need to be willing to leave the trade and get a high reward to risk. Because trend traders, don't forget, are going to make a lot of money with high reward to risk, not with high win rate, right? So you need to be able to let the trade run as much as possible. And Derek says here, so you backtested it on trend. That's awesome if you can backtest. But you need to be able, the first thing you should have in your strategy, first of all, is a way to figure out, is the market trending or is it not trending? Right? That's the first step. If you can figure out, yes, it's trending, well, how strong is the trend? And if it's strong and it pulled back to the moving average, the 8 EMA, then perfect. Like that's the perfect setup. But if it's not strong, if it's like weak, well, you have no reason to trade and you should be away. So you cannot trade it all the time, like all day. That's going to be difficult. But that's pretty much what I have to say. And of course, backtesting is stronger than anything, right? So, I mean, testing is going to build confidence. So you have to be able to test and pick those results. Try to see if, well, don't change too many things from your backtesting to your live trading. And it should work then if you tested everything before, right? So that's pretty much what I have to say. And yeah, pretty much it. Fatima is asking a nice question too. What is the best amount of leverage? So here's my take on leverage. And I like to talk about this because people get so happy when they hear about a 500 leverage or a like 500 to 1 leverage or a 400 to 1 leverage. People get so happy with this. And I've seen it 2000 to 1 also. So, what is leverage then? Leverage is only a way for you to to have a bigger transaction, a bigger trade for less money. So here's what I want to say. I don't care at all about leverage. Okay, like I have no idea what my account is right now. It's maybe like 20 to 1, maybe 50 to 1, but I don't even care. Why? Because I know that I know for a fact that if I'm going to trade and I'm going to risk 2% of my account or even 1% of the account, I know for a fact that I won't use all the leverage. Like this is clear. So unless you're gonna take like multiple trade at a time, like 10 trade at a time or 5 trade at a time, there's no reason for you to think about leverage, because 2% of your account is usually not gonna impact how many trades you can place. Like 2%, you're gonna be able to place a trade, 2 trade, 3 trade easily, without thinking about having too much leverage or being over leveraged. So as long as you can place your trade with 2% or 1% per trade, there's no reason for you to increase your leverage. So figure out which leverage is allowing you to take 1% per trade, and that's the only thing you should think about. Right? And if you risk only 1% per trade of your account, whatever it is, like $200, $1,000, $5,000, $50,000, $100,000, it doesn't matter, right? So as long as you can take 1% of this, put it on a trade, have a few trade open at the same time, possibly, then you're fine, right? Then you're fine. You don't have to think about leverage. You don't have to adjust the leverage. But if you see that you need to have leverage really to place enough trades to still risk at 1%, then just adjust the leverage. But what I see is that people want to have too big of a position, so they fix the leverage based on that. But it's really not a game you can win over time. Right? You're gonna get big wins and big losses. I've talked with someone who, and I'm not sure if that person is here, but the guy said he's been having a 500% gain this year, and then he's back to 100%. So he lost 400% quickly, just because of probably over leverage. So that's something you have to be really, really careful. And I'll just recap this once again. But if you have no reason to be in a trade, right? If you cannot find the reason why you're in that trade at this point, right? If it's too late, well, get out. There's no reason to be in. So I hope this answered your question, guys. I think it's pretty valuable. As I said, it's going to be turned into a podcast next week. Let me just check on YouTube here quickly. That's pretty good. So it's going to turn in a podcast next week. If you guys have any questions in the meantime, comment below. Comment somewhere. And I'll do my best to answer the question. You guys can always post in the Facebook group. Right, this is available. This is for you. If you're not there yet, disastertrade.com/group. You'll see the Facebook group there. And guys, I'll see you next week. Next week, we might have a Q&A a little bit earlier in the week, like a Wednesday or something. I'll post everything in the group. And we'll make sure to do this next week. So thanks, guys, for being here today. And I'll finish this, and I'll see you guys pretty soon. Ciao.